Well, we are here. First charting and training call for February. The month of January went really well. I hope you all took like added up or added up, tallied up, that's a word, tallied up your Januaries and were able to look back to see about your risk management. I'm gonna stop sharing because I kind of want to hear some stuff. Looked at your risk management and looked at your opens and closes for January to see if there's some things that you saw as improvements, some things that you saw as things that you will continue or needing to adjust again. Is there anything anybody wants to share for the month of January that you found after our first month on our risk management challenge? Anybody got anything they want to share?
Well, I'll share. I
Okay.
started off over managing risk challenge.
Mm-mm.
So I one day in January, I backed out of three trades that ended up being positive. And I
Okay.
was like, what is wrong with you? Get this together. It's okay. It's okay. You don't have to back out and get so nervous. So I was
Mm-hmm.
nervous Nelly in the beginning.
Mm-hmm.
But as I look through all my other trades, it really helped me out because I don't even have much of a memory of the ones I did back out of because the
Mm-hmm.
day ended up so positive anyway. It was I didn't lose much when I backed out of something that ordinarily would have been a max loss.
Yeah.
And I'm more careful on my sizing. Like I'm not doing like three contracts
Mm-hmm.
all the time. Three
Mm-hmm.
contracts if I'm going after money that maybe I lost, I might do three contracts. But ordinarily it's two contracts.
Okay. 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 We did talk a little bit about last week. We talked about maybe doing in the morning if you're doing with an opening range breakout and you feel more confident about the trade, maybe you do more contracts then because then you are more apt to get your $40 or $50 and then back out. If you've got, two or three contracts there and you're getting 40 or $50 a piece for those, then that's going to be a good bulk of your daily, your daily goal. And then your next trade, you can do a smaller amount for your second trade. If you do a second trade, you can do a smaller amount because you're probably not going to get as much in premiums, and you may not be in that same move as far as the trend. You may not get as much in the trend on that second trade. So that's just something to think about
I think
when
that's
you're
a great
looking at
idea.
sizing.
I
When you're
remember
thinking
you
about.
going over that. I've just been trying to talk myself into it, but this week
Mhm,
I'm definitely going to be doing that. That very first trade, I'll do like
mhm,
three of them. And
mhm.
then, yeah, no, that's very good. I've been trying to talk myself into doing it. So I'm glad you said that again.
Yeah, yeah, keep that in mind. Keep that in mind. Cool, cool. Anybody else want to share?
I'll share. I went over my spreadsheet multiple times because to me, I'm like, this can't be right. But because I did have 8 losses in January, but even with the 8 losses, I made $972. And I didn't think I made that much money.
Mm-hmm.
But I did much better with tracking my trades. Um, I did notes on some of them, not all of them, so I have to do better with that. But I just didn't realize I had because I really was being conservative. I was going with the for the 40, but really my goal was $50.
Okay.
But I was going for $50 and I got out and
Mhm.
I made money for January, which I'm still digging myself out the hole, but that was good.
This is good because we do know that we've also had times where we've waited till max loss, hoping
Yes.
it come back, seeing it might just we still got time today, and before you
Right.
know it, that trade and you've wasted mental energy and all the things hoping for a trade that maybe comes back, but then maybe doesn't. And if it doesn't, you've lost the whole day where you could have been making more trades. You've lost that time because we were waking and hoping for a trade to come back.
Absolutely, because I definitely would have had max loss on most of those 8 trades in the
Mm,
past.
mm,
Definitely.
mm. Look
So
at that. Look at
yeah.
that. Look at that. I like it. I like it. I'm so glad to hear that you made almost $1,000 this month. Look at you.
Yes. Thank you.
Yes, yes, yes. I love it. Anybody else want to share? Mm-hmm. Mm-hmm. I think it's good. We do have folks who share on a regular basis. Each day you kind of put our stuff in the chat. I want you to be sure though, one thing that happens for us is the brain remembers the negatives much better than it remembers the positives. So when you keep track of your trades on a daily basis and you're writing down what is your profits or losses or whatever, and then you cumulative, you add those up, you tally those up, you realize that you probably did better than you thought. And you or if you did a loss, you probably didn't have as big of a loss as you thought. So definitely keep those things keep writing those down. I see Andrea. Hey there, Andrea. How are you? Definitely keep keeping track. Okay. Reminder about our risk management. We're watching things like our sizing. We are watching our timing. You're watching if you're doing, are you doing the same like stocks that have the same stuff in it going in the same direction, because that makes your sizing bigger. If you're doing SPX, XSP, and triple Q, and you've got all of them going up, that's make your size bigger. Now, if you've got SPX going up and you got triple Q with something that's going down, then that's like a hedge. That's different. If you're doing multiple things, or if you got like NVIDIA going up, you've got SPX going up, and Apple, let's say, going up. That's all going in the same direction, and that's like weighted. That makes your size bigger. All right, so keep that in mind and if you're distracted, if your mentals are not there, if you know you're going to get into a trade and you can't watch it, that this may not be the time, right? If you know you got something else, you really know you need to be focused on something else, then this may not be the time to be trading, right? So you got to keep all these things in mind. That's all a part of risk management. That's all a part of risk management, okay? That's our reminder. All righty. I gave y'all a long list of, we won't go there now. I won't go there now. We wanted to talk about pullbacks versus reversals, right? I'm going to see if we can see some of those, because some of it is still hard to see whether something is a pullback or a reversal. I think the biggest thing we can use when we're thinking about pullbacks versus reversal is, are we going counter trend to the day, right? Are we countering the trend of the day? And then keeping in mind that there's other things that are going to give us confirmation, if you want to call it that. I don't do a lot with the fibs, but people use the fibs to determine whether something is a reversal or a pullback. If it pulls back into what's called the golden pocket, which is between the 37 and the 67, people use that as their. Again, I don't really use fibs like that, but I know some of you do, and that's the area where you'll see, is it pulling back into the golden pocket, because that may be the reversal area. We pretty much use VWAP, right? So we're looking here. Let's look at this as an example of, where'd my stuff go? Okay, I need to see my stuff more. Where's my annotation? Did I stop sharing? I did. I need to be sharing. That's why I can't see nothing, because I'm not sharing. My sharing gives me what I need. There we go. Okay, so we're looking at, this is us looking at, I think this is Thursday, right? This looks like Thursday. Yeah, Thursday the 29th. Price falls and falls and falls, falls and falls and falls, okay? Now, to go from these two candles, okay, what's this green candle? What have we called this green candle in the past? Anybody remember? When one candle overarches another candle, it is called engulfing. So the engulfing candle, I'm on the 15-minute chart. Y'all can see my chart, right?
Yes.
Yes.
Okay. I'm on the 15-minute chart. Okay. That's an engulfing candle. An engulfing candle generally is a strong reversal candle where we're reversing, going back in the other direction. Now, this is a 15-minute chart, which smaller time frame, we got to watch that. Okay. Let's see if we switch to a 30-minute chart. What do we see there? Now, on the 30-minute chart, we don't see it as much of an engulfing until you get a couple more candles in. Right? So at this point, this is looking reversal-ish. Okay, because we've got our set of tweezers right here, the same, we're at the base is the bottom. This is looking like a 2-2 reversal. I would go with that, being especially we got a failed 2 down. This is definitely giving reversal, right? Where I would look at it reversal-ish. Yep, I'm ready to ride. If I'm on the 15-minute, 30-minute, we will be ready to rock. Now, entry, really, real true entry, this is probably one of the hardest things to do, is for this failed 2 down, entry really is the top here. But do we want to wait that long? Because y'all, we get real antsy, and I'm saying we because I'm part of we. We really wouldn't enter that put credit spread until after we pass the top of this candle. But that would mean our strikes would be the bottom of this green candle, which the bottom of that candle is 68.70, and the top of that candle is 69.09. That's like 35 points. Like, whoo, I don't want to wait 35 points. I saw the reversal way back here, but that's one way we don't really have the luxury of that, quick movement. We need something that really is a confirmed turn. We need the confirmation of the turn. So we're safer to wait till after it passes there to really give us a confirmed entry. We really need that, right? Even if you were down on the 15-minute chart. Even if you were on the 15-minute chart, you still wouldn't have had your entry until it passed the top of this green candle right here. And the top of that candle is still 68.98. So that's 6,900. On 15-minute, you got an entry that's a little bit, that's a little bit closer to 69. I probably would have waited till it got across 6,900 real good. But that's a little bit closer entry if you're on the 15-minute chart. But we have to take the time to make sure that the entry is confirmed. Then if we're riding now, we've got to put credit spread, we're riding with our PCS, we're going up, we've got a plan. Even though we're riding this put credit spread up, we have to use the chart to help us determine how long we're going to stay, right? I'm riding the put credit spread up. What do we need to look for next? We need to look for how does price act at VWAP? That VWAP is a spot where we're looking to see, does price accept VWAP and go on over and keep going? Or does price get to VWAP and really reject it? Well, it does go across. It comes back down a little bit. We get another set of tweezers, and then it goes on up. But if price does not do right at VWAP, if price gets to VWAP, because we know VWAP is support resistance, if price gets up here to VWAP and turns back, that lets us know we got to bail out of this put credit spread, right? So even though price has been going down all day, so this is the position we're in our mind, right? This is where we're using the chart to help us with guidance. All right. So during the day, the price has been going down all day. So we're definitely on a red day. right? Price recovers down here. We're ready. We believe this is a reversal. We're ready to get into us a put credit spread going back up. We're going to ride this back up, but then when it gets to VWAP, this is where we need to watch closely to see how does price respond when it gets up here. Does it accept VWAP and go on through? Does it reject VWAP and come back towards us? Because remember, it is still a red day. So the trend really is still down. Even though we've seen a nice little reversal, is it really a reversal or is it a pullback fake out? Right? This is where we use VWAP to help us with that. It does pull back some. Then we get a little bit here that says I'm still okay. Let me see what I was looking to see what did that price look like when it pulled back? Like, where did it pull back to? Pull back into the 69.11. Well, if you went down here, you would have like a 68.70, 75 because the entry here, this is where we also got to watch where we picking our strikes. Even if we entered here, our strikes should be below the bottom of this candle. So we really should have been in the 68.70s area, because that's below the bottom of this candle. So even if this turned back, this part here, the 69.11 shouldn't have gotten us too nervous because we still got 40 points between this right here and us. So we would have watched to see, you know, how did these candles respond and how did they react? And then when they went on about their way, we could be gone. Or when it got to VWAP, and it started stuttering or dancing around, this is where you shut it off with your PDT hack. Right? This is when it gets to VWAP, this could literally be a target. You say, okay, I'm at 68.70. If it gets all the way up here to VWAP, this is now 69.20, 25. We're 50 points away. That's enough movement for you to PDT hack that. For whatever profits, we don't got to keep all the money. That's why we go in risk management. Right? When you get to VWAP, this is where you start looking to close the trade with your PDT hack or close however you're doing. But how it's challenging or how it's, you know, acting at VWAP is a place where you can say, okay, now I can go ahead and exit. You don't even have to wait to see what happens with this drop again. That's where you say, okay, well, for how it acts at VWAP is where I'm going now. And then you got an opportunity for another trade. Really, when this trade goes back above VWAP, this is another entry. Basically, this set of tweezers that goes up again, you got another entry for more ride. If you decided you were going to exit here, which would have been good, once you've got this little pullback, this is basically up, pull back so it can go some more. That's another entry point. If you wanted another entry. All right, this is where we use the chart. So I know I was what question that was asked of me was, how do we know it's a pullback versus a reversal? And you really have to just use, I think I won't say it's a case by case, but I did give a few little things in there. You're looking to see that is the volume going along with the reversal. How is it acting when it gets here to VWAP? You know, when it comes back to something that is going to be a turnaround place, like here we go, this was an up day, it pulled back. This really isn't a reversal. It just kind of danced around after that. This is more like a pullback, because a reversal kind of would take you, but it came back pretty far. That's a pretty big dip right there. But that's another reversal here, really, going back up, an entry at the passing of that failed 2 down. I don't know if I've made that really much clearer, but because I feel like it has to be, I won't say like situation by situation, because there should be a way to see it. But looking for the engulfing candles, looking for a full 2-2 reversal or some kind of reversal, like here we are on 23rd. This is a full reversal here, right? Price went up, gets up here. It's a 2-2 reversal between these two candles. And I'm on the 15-minute, but you also can use, I usually use a 30-minute chart too, because I like the higher time frames, but definitely look at multiple time frames, not just the 5-minute or 15, look at multiple time frames to see what is actually going on. But once this is a full 2-2 reversal, anything that's past that, the bottom of this candle right here, there's your entry. And it passed that back on that candle back there. But past here, we're good and gone. It does get down to VWAP. It touches VWAP one time and then it touches it again and goes on through. But notice it's, this price started way down here and it basically goes back to where it started almost. Got another set of tweezers and it goes back up again. But I think the hardest thing for us is that we really like to get beyond the reversal. And by the time we watch to see that it's a full reversal, we can feel like it's too late. I know for me, I can feel like, well, shoot, I don't miss all the good stuff, but we really haven't missed any good stuff. Okay. So, I'm gonna look here on the 23rd, on the 30-minute chart. The other thing, another way you can do it is, see, we get in, I feel like we get in trades and then we decide we finna ride for the rest of the day. We really may need to adopt, or you may need to adopt, whichever word, adopt. Yeah, you may need to adopt I'm getting in and getting what I'm gonna get, and then I'm gonna get gone. Like, you need to plan to be here as long as you need to be, but as short a period of time as possible. So this is the 30-minute chart. Price goes up. We have a reversal here. This is a failed to up. It's a failed to up. Entry is when price passes the bottom of that candle. There's your entry. There's our entry. Price passing the bottom of the failed to up is entry. And it did that. This is 30-minute chart. It did that on the next candle. Now, it pulled back a little bit off of here, but then it kept on going downwards. Yeah, we'd like to get into and collect our $60, $70, $80 and ride to the end of the day. But we really might want to say, I'm getting in here. Okay, let's talk about where your strikes are. I'm going to tell you what we're doing. You're getting in after it passes. This was 69.20 something. You're using this as your strikes. Your strikes would be 69.35, right? You're going beyond the candle that you're getting in, 20.39, 69.35.40 call credit spread is what? Oh, come on. That's what you're getting in on. That's your call credit spread, 69.35.40, because I went beyond the top of this. That's your strikes. And you're saying, okay, I'm going to collect. Let's say, for example, you collected $70. By the time you get to 22, that's 15 points away. It's not like there's still money. Good money would be at 35. It might even feel like it's a kind of close. You're like, well, 35. The price is only at 22. Right? So you say $70 and you decide I'm in for $70, but I'm taking 35 or 40 out of this. You're not saying I'm taking $70 out of it. You're saying I'm getting 70 now, but I'm willing, depending on how this goes, I'm willing to PDT hack and be gone with $40. Like, I'm not here to stay a long time. I'm collecting my 70 right now. And then I'm going to take the opportunity to PDT hack it for, $475 or $480, for $470, which is $40, $480, which gives you $50. Now, I realize if you're in Robinhood, then the PDT hack is not something that you're working with. You've got to now maybe go further out than 69.35. You got to go further away. You're going to take in less money, but you've got to be a lot more conservative in what you get in because it needs to go all the way for you. Right. So you've got to take in less premium. So that's something we have to think about when, if I call out 69, 35, 40 based on something like this, you might have to go to 40, 45 or 45, 50 because you might go further away to make sure you've got more cushion and more buffer. Right. Because you don't have the PDT hack option. That's where you got to make your adjustment there. You're going to take in less money, but you're hoping to be safer because you're going further away. Right. But for those who can PDT hack it, you say, okay, I'm taking 70, but I'm taking 70 with I'm getting into this trade with the mindset of I'm getting out after $40, regardless of what happens next. I'm going into this trade because I'm leaving here with something. You pulling the TJ. I'm leaving here with something. I'm getting into this. I'm taking my $40, my $35, $40. I'm stacking these coins and I'm going to be gone. Even if it goes, down and down and down, I'm taking my $40, $45. I'm taking whatever I can get off this trade and I'm closing it. Right? That's a different mindset for a lot of us because some of us are getting in trades like I'm getting all 75 of this, or I want a PDT hack it for $4.95. Of course, we want a PDT hack it for $4.95. Who doesn't? Who doesn't want a $4.95 it? But shoot, would you rather have a solid $4.70, $4.80 or a questionable none? 400 because you sat there too long for it to come back. No, $4.95 of course is what we would like to have, but if you can get a sure $4.70 or $4.80, take your money and run. Okay, get in, get your few dollars while it does its thing. Come into the trade with the plan of I'm getting my few dollars and I'm closing this up so that I'm on to the next. Okay. Whether it's, you know what I'm saying? Y'all with me? Okay. What? Go ahead. What you gonna say?
Friday. Talk to me.
What happened Friday?
We was in the trades, and we wasn't trying to get $40.
What were you trying to get?
We was trying to get the max. So maybe there's a tier, but
Yeah.
if the opportunity presents
Yeah.
itself,
Absolutely. Yeah. Yeah. Oh, I'm not saying don't. I'm saying if you're there and you can get the max, then yes, do get the max. But we want to we want to enter the trade with the thought of I'm gonna get what I'm gonna get and go. And if the max presents itself, then yeah, I'm gonna take that. But I'm not entering the trade with the max in mind. That's what I'm trying to say. The difference is there. I'm entering the trade with the plan of getting my $40 or $50. If the max is available to me, I'm going to stay in and get the max. Versus I'm entering the trade with the max in mind and I can't close this trade unless I'm getting the max. No, you coming in here to get what we can get. If we can get the max, yes. If I can't get the max, I'm leaving here with something.
yeah, for sure. That's what I did in my very last trade when y'all were calling my name. I just got out. So
Yeah,
yes.
you ignored us. And it's okay.
Because I had to concentrate. But I took my little bit of money and I got out. That wasn't a max trade. That was an in and out.
Yeah. Cool. Yeah, exactly. This was Friday. Friday was a lot of kind of nothing. Looking back at it, it's kind of was consolidation. It's a pretty big dip here. This failed to down here, but Friday it went up a good bit, went down a little bit, but Friday ended up being an inside day because it was inside on Friday. Didn't do anything but go up and down. Okay.
Was that a one earlier in the day?
Yeah, it was a one day all day. I think I had mentioned on Friday that it was an inside day.
So then it stayed. Okay.
Mm-hmm. I think I said that when we were trading. I was like, yeah, today is a one inside day, which is why it's just going back and forth.
Yeah.
Mm-hmm. Yeah. Everybody understand what I was saying? Okay, so I put it as far as the charting went. I did the chart on because it was an inside day on Friday. On the daily, I put us on the way the one candle works, which we talked about this on the strat. If it breaks to the outside, to the top, we're riding put credit spreads going up. If it breaks down, we're going call credit spreads going down. The 4-hour candle is also an inside candle. So I marked it here. If it breaks out 69.49 going up, that's a put credit spread. If it breaks down under 69.01, that is a call credit spread. So either one of those entries, whether you want to enter based on the 4-hour or enter based on the daily, either one of those could be entries. It's really what you're looking for. I think last Friday we talked about the 4-hour, and by the time Monday opened or Tuesday opened, it had done blue. It was outside of our little 4-hour thing. And we was like, it was already gone. And we were like, well, we could have still traded it because it was the direction that it went. We still could have traded put credit spreads. I think it went up that day. It jumped up and ran up that day. So that was cool. Anybody got questions so far? I'm trying to take this picture. Maybe it'll pop up. Okay, I gave us a list of stocks in our Telegram. I'm going to show you what I did. I'm only going to show you on a couple of them because I don't think it won't be necessary for me to go through all of them. I just want to show you what I did. So that way you'll see. Okay, well, so where are you? I'm bringing up the snipping tool. Oh, there it is. And it's not popping up. There we go. I want to put this graph into the Telegram if I can ever get the snipping tool to start. There we go. Okay. I think when we were on the call just now, I looked at eBay. And I was on the weekly. I looked at I looked at weeklies and monthlies because when we trade these, we would be trading them on the weekly time frame. All right. So this is eBay was one of the ones on the list. So I looked on the weekly chart, which I believe I put on the Telegram that this was a weekly. The eBay was part of the weeklies. Yep. So eBay, it was a failed to up. All right, this is a failed to up on eBay on the weekly chart. Failed to up. If and when price goes below 90, 60, 90, 97, then we would pick a call credit spread. Now, our call credit spread would be way up here at 97. 97 is going to be a little far for some premiums, I believe, for the week. 97 is a pretty good bit away. I don't think there would be money up there. So I wanted to look to see. I'm gonna look real quick, but I doubt there would be money as high as that. 7 points away on eBay. It might be, but we would use February the 6th, 97. It shows $7. Yeah, no, it wouldn't be worth it for that. But we're here on the weekly chart, which would be our entry. We would drop down to the daily chart to see, even on the daily chart, there is a gap that eBay has left behind. And this would be just you looking at it, whichever of these you may decide you ain't interested in trading none of these. This is not something I'm going to manage. It's not something I'm going to call out or manage for us. I just was saying that I know some people here like to do other stocks as well. And we had talked about failed twos and that kind of thing if you're looking for other things to trade along with our SPX. But this is not something I'm adding to our offerings and going to manage for us. It's just I was bringing it up and just to show that there's ways that we can use our combinations that can work on other stocks as well. Okay, so I'm down to the daily now. There's a gap here on eBay. So 94.42, I probably would get something above the 94 just in case it decided to get back into that gap. I would probably look for a call credit spread above the gap. if I was going to trade eBay, would be my thoughts. There's a support down here though, so you'd also want to maybe look at some charting. There's a pivot here. Some other things, if eBay was one that you're interested in. Taiwan Semiconductors, I think that was one that we looked at. AMD has earnings this week. Taiwan Semiconductors may trade with the earnings, may trade in conjunction. It's a failed 2 up as well on the weekly chart. It's a failed 2 up. Call credit spread entry below 328.20 going. This would be something that would be going down. Now there might be some money at 345 because Taiwan Semiconductors is a much bigger stock. It's a one on the day. So you would, also if it broke 329, you could then go with a 339 call credit spread above 339. CCS. Okay. Just thoughts. And the weeklies and monthlies, if there was monthlies on there, those would be ones you could look at that would be for longer period of time. But one that caught my eye was the Triple Q. Triple Q showed up on the monthly list. Triple Q call credit spread entry passing below 607.05. So I'm on the monthly chart. Triple Q really has been for the last 3 or 4 months. See, it's kind of in a zone. It's been consolidating. Triple Q puts us right. I mean, it's the same stuff that's inside of our SPX, right? Similar stuff, not the same, but similar stuff. Failed 2 up, even though it's green. It's really more of a doji. It went up. It went 2 up. Not quite red, so it's not a full failed 2 up, but it would be an entry to the downside below 607.0405, and then you'd want a call credit spread above here, above 636. That would be a longer term one if you're thinking, and this would be a thought too. Is Triple Q or is SPX going down? Because they really, again, are kind of the same stuff. With that being said, what does the month look like on SPX? Let's go look at that. The stock we do trade.
Do you factor the ATR?
You can, yeah, that's a good idea. Factor in the ATR, yeah. Now on the monthly chart, this is SPX on the month. It's 2 up. Don't look quite like Triple Q looked on the month, and it's not a failed 2 up. It's just a 2 up. So this one is wait to see. Literally wait to see. Let's go to the weeks. It's a 2 up on the week, even though it's been kind of consolidating. If you're looking more wider range, but this wick up here, it's not like it's running up and staying up. It's closing right in the middle of places it has been in previous weeks. It's not like we got higher highs as far as wicks go, but it's not really higher highs as far as, well, this one, the body on the monthly did go higher, but the weekly, it's staying right in the zone. But y'all know we don't necessarily look out too far on SPX. We will go out 3 or 4 days if we're looking at, a 4 or 5 day expiration, but we don't go out too far on SPX. We trading day to day, baby, day to day. Yes, we are. There was another question somebody had. We talked about the reversal versus retracement. Somebody else had a question. Sandra, what was the other one you asked about Adam.
Adam speak, yes.
Good old Adam verbiage. I think the one today was easier to understand. Now, Adam does talk in Adam lingo.
A lot of times I've copy and paste it into chat, but it saved me time if I just understood it.
If you just under that, definitely putting it into chat would help out. Okay, A plus trading the last 24 hours in SPX, 68.97 failed breakdown. So failed breakdown, this is the same word as a failed 2 down. When he says failed breakdown, he's basically saying failed 2 down. That means the price went down, it broke down basically, but that failed and it popped back up. That's pretty much what that says. Failed breakdown means we're getting ready to start going back up. It went down there, it didn't stay. The breakdown failed. Was the long trigger, of course, long means we're going up, given live yesterday. That means yesterday while he was in Twitter, he gave it live. Targets were 69.56 and 76 were bonus, and they hit it exactly, retested it at 5 a.m. because he's trading ES, and ES trades through the night. So that's why sometimes we'll have numbers that's SPX numbers, and he's talking about ES. Okay, so the plan today, 69.27 to 30 is the support, but it's weak. The bulls must recover 69.48 in order to see these other numbers. So the bulls, we know they like us to go up, need to recover the 69.48 in order for us to go higher, to go up to these numbers. If 69.27, which is this support, if that fails, and I usually put if, because he doesn't even put if in here. He just says 69.27 fails. I put if in there. If 69.27 fails, then you sail to 69.09, 68.99. And if it gets past there, there's a hard sell below. And it'll keep going down, basically. And then I say the difference between ES and SPX is 26 points. So anytime you're watching his tweets, you can use this number that I give you in the morning. You can subtract this number from his numbers, and that'll give you SPX. And then the XSP range, so we have people who trade XSP, you can use this range, which basically means for me, I've taken the numbers out of this, and I've said the lowest number I see here is 68.99, and I transitioned that to XSP, which is 689. And the highest number I saw here was 69.76. So for XSP, that would be 698. So I say if you're trading XSP, it shouldn't go below 689. It shouldn't go higher than 698.
The hard sell below means that if it gets lower than that, expect the price to drop really fast, right?
They keep going. Yep.
Okay.
Yep.
Sometimes he says watch for traps, or the trap language that he's talking about.
Yeah.
What does that really mean?
Watch for traps means that the price will fall, could drop into that zone, and the market maker will make you think it's going to keep going, and then they'll reverse it and send it back up. So it looks like
trap, buyer trap. What are those?
I don't know if you call it a buyer trap or a seller trap. It's just a trap. Basically, it's like it's going to look like price is falling. So the market makers will want you to think it's going to keep falling, only for them to do a monster wick and run it back up while you are sitting in puts.
Okay.
Yeah, so they're trying to trap you.
They don't go up.
Right, they're trying to trap you into a trade that is going, and then they'll go the other direction. They're trying to trap you and trap your money. I was going to look for another one where he does say watch traps. And he just recently started saying that. He didn't used to say watch traps as much as he's been saying it more recently. Here we go, newsletter traps. Okay, so you've got here per 3 p.m. newsletter traps to 69.48, then recovery. So basically the price went down to 69.48 where people thought it was going to be falling. Then it recovered and went back up to 69.61. Don't want to get trapped in any trades. Y'all did not do y'all homework. I sent the homework and one person did the homework of deciding what was their favorite strat combo and putting a picture of it in the chat. The reason I asked y'all to do that is because I want you to be able to identify you, not for me. I want you to be able to identify what setups or which combos do you like, so when they happen on the chart, you know what you can do next. When
That's
you
fair.
see a
That's
3-2 or a
fair.
2-3, you can see it, then you know what to do next.
Yeah, that's fair. I really don't even use the strat, truth be told. I
Okay.
like the fair time continuity. I've got
Time. Yeah.
Yeah. At this point, I've really gotten into knowing how to read the chart for myself. So at this point, what I do use TradingView for is for the fair value gaps. But getting in, I really haven't even used Magic 8 Balls numbers in like the longest time. But I like that there happens to be a nice trend with the best times as of late, because that hasn't always been the case. Remember, we were 210 for a good while. You know what I
Yeah,
mean?
that's true. Yep.
So,
I think you do use the strat a little bit because you do look at failed breakdowns. You look at failed 2 downs.
so yes, but I could see a reversal without looking at a 2 or a 3.
True.
Once.
Yeah,
So that's
that's
what I mean. So really on my trading view,
yeah.
I don't really put the strat assistant up as much. I really
Mm-hmm.
just have the fair value. If
Mm-hmm.
it's falling, and 9 times out of 10, you tend to hint that it's a reversal. So
Mm-hmm.
I just say, yeah, that's what I thought I saw. So, but yeah, I've kind of gotten out of it. But yeah, I guess I could go back to it. And January's been interesting. We never saw so many threes in January, so
Lots
go
of
figure.
threes.
Yep.
Yeah. Mm-hmm. I think like anything else, whatever is going to help you to be able to read the price action and be able to read the chart. If you're already reading the chart, and you're reading it adequately and accurately, then don't necessarily add the strat to your reading. But I know there are a lot of you who are not reading the chart, who are not necessarily reading and understanding what's happening. And the strat is going to be something that's going to visually help you to see what's happening. If you already can do it, if you're already seeing engulfings, you're already seeing reversals, and you're already seeing those things, then the strat may not be something that's helpful to you. But if you don't have an idea of what is your setup or what candle formations you like to see before you enter, then the strat is something you might want to consider using to help you to identify what things do I like to see when I want to enter a trade. That's what I'm offering. That's what I'm suggesting the strat can be used for. This was another one, Sandra, where he said about the watch the traps. Just let the runners pay. 69.87 watch traps, 69.72. Basically, what he's saying here is price can fall down to 69.87. They might trap you there. It may go down as low as 69.72, but then you've got more room. You can sell below those numbers. You can sell below 69.65. You say if it gets that low, you can sell below that. But if it turns around, then you're going to go up to 7,006, 7,014, 7,030. But this 69.87 might be the trap where price will fall down to there and then turn around and reverse, or as low as 69.72, turn around and reverse. But if it gets to 69.65, it may fall lower on that. It just says watch for traps. Just don't, in that general area, keep your eye open because it might reverse. It may keep going down lower.
Okay, thank you. That makes sense.
You're welcome. You're welcome. All righty. Okay, let's go look at, well, I wanted to, before I do that, let me go back to SPX on the week. and let me put some stuff on my chart because I think my chart has gotten a little too busy. It's gotten busier than I want it to be. Okay, so we're on the weekly. I'm on the weekly chart. Let's put some stuff on our chart. We're starting on the weekly. What time is it? 6:52. We're starting on the weekly chart. And we're looking at the high, the weekly high, which I marked. It's at 7,002. The weekly high is at 7,002. The weekly low, 68.71. I'm actually going to adjust this. Weekly low, 68.72. The weekly open is showing as like daily support. Notice this for daily support, 69.22, but it's also weekly open. Weekly open, 69.23. And weekly close was actually, it shows weekly close. It was a weekly close in January 12th. Weekly close this week was also the weekly close of the week of January the 12th. Right in that same area. Okay, weekly close is right in there too.
Yeah, 6/9/21 and change, yeah.
Mm-hmm. All right, so there's those four things: open, close, high, and low on the week. Make sure you mark those on your chart. Okay, let's go to the daily chart after that. Oh, let me look at the weekly, make sure I didn't leave any gaps that I needed to mark. Not there, not there. Nope, looks like all the gap. Let me go down a little bit, make sure there's nothing down here that was waiting. All right, so on the weekly chart, I don't see any gaps that need to be marked. Let's go to the daily chart. We've got the weekly high, which is also a daily resistance, 7,002. We do have a gap that is from Thursday to Friday. From Thursday to Friday, there's a gap that was left here from 69.64 up to 69.68. Make sure you mark that on your chart, 69.64 to 69.68. It's between Thursday and Friday. Between the close of Thursday, which is the bottom of this candle, to the top of this wick for Friday. That's what was left that didn't get filled. The top of the wick on Friday. Let's see if there's any more gaps that need to be marked. Okay, so this one between Friday the 23rd and Monday the 26th has been filled. There was one between Wednesday 21st and 22nd. That one was down here in the 6,800, 68.76. That one got filled on Thursday with that big wick on Thursday. The gap that was down here. Y'all see this on my chart. There was a gap down between 68.75 all the way up to 68.94. That one got filled with Thursday's price action. Okay. That's closed, and
We need to look for the down because that was the hesitation on Friday. How low it's not well, yeah, how low it could go because technically, it could have still been free falling.
mm-hmm. So there's another gap down here from Tuesday the 20th to Wednesday the 21st. There's a gap here that's yet to be filled. It's from 67.97 to 68.05.
That part.
67.97 to 68.05.
Gotcha.
Okay.
Yeah.
And gaps are the close of one candle to the open of the next. Pull back off the gap. Pull back off the wick. Pull back off of price action. Okay, looks like there is another one down here and another one from December 18th. Looks like there's another gap down here from 67.75 up to 67.92. Where's my color? There we go. Okay, you do want to put these on your chart because when price starts dipping, you're wondering where is it going? This is where it may be going. It may be going to get some of these gaps. Here's another one from 67.21 up to 67.58. That was from December 17th. Okay, marking it on our chart. Actually, this one was still on my chart. I just left it there. Now you can go to smaller time frames looking for gaps as well. I mean, you can go all the way down to the, to the minute looking for gaps. I usually don't go much past the daily to find them, but you definitely can go further looking for some gaps. Usually if you find them on the daily though, you've kind of got them, but trying to see if there's anything else that's jumping out at me. And then in the near zone, as far as price action is, I don't see anything. Okay, so I'm on the daily chart now. Let me go back to the daily chart. I'm looking for support and resistance. Looking for the peaks and the valleys. You can switch it to the line chart and see if there's some peaks and valleys that you're missing on your lines. There's something right down in here, 68.46. I don't have a line down in here. I need something in here. Let me see, one of these is that VWAP? That needs to go. 68.46, some 68.45, 46, somewhere in there. There's a support. Not sure what kind of spelling I'm doing. There we go. Daily support resistance. It's in the 68.45 area. A bunch of the other ones are still up there from previous. I hate to take them off because then when they're not there, I'm like, something's got to be in here. Like, what was this? Then I'm like, well, there was something here. I know there was. So I'm just going to leave it. Just going to leave it.
So your favorite strat? Or did you put that in the chat and I didn't read it.
We talked about it. I think I might have said it. I like the 3-2, the 3 failed twos, 1 failed 2, and 2-2 reversal. Those are my favorite. The failed twos on the top and the bottom, and the 2-2 reversals. 3 failed 2, 1 failed 2, 2-2 reversal.
Yeah, that makes sense. You tend to look for the reversal before it officially closes. I'm like, how you gonna call it?
Yes,
How you
yes,
gonna call
it's
it out?
yeah.
Wait till the close.
Yeah, I have to be mindful of that because I'll say stuff like potential reversal working and they're like,
Like, oh
yeah, it's
Lord.
like not quite, sis, but I start seeing it early. Yeah. Yeah, I just want to be letting y'all know the look. So ES right now is at 69.42.
You read my mind.
It's at 69.42. Let me see what the 15-minute chart is looking like, which means we're probably in the 69.10s, maybe something like that for SPX 500, because we're about 27, 20 something points. It's like 69.17 is where SPX 500 is. 69.17.
Oh, we dropped. We ended at 39. Okay.
Mm-hmm. But we got all night, but
Yep.
you're right.
Yep. Yeah, we got all night. It just started. I don't know if that's partial shutdown related. I don't know because I forgot about it. But yeah.
Could very well be. Could very well be.
Mm-hmm.
Mm-hmm. What other questions do we have? Anything else we need clarified? What's Monday, the 2nd?
Yeah. No, I think since we're still doing a RM challenge, I still gotta do better of letting the trade go or closing the trade. So I will be working on that because I have rules.
Mm-hmm.
And at the same time, I'm looking at it and I'm like, you know what it is though? And that's not a good excuse. But at the same time, because of these onesies, these or one candles, because of this indecision of the up and down, we've been doing the V. So it literally it's gone there and it's come so but it's like, okay, but will it go back there, you know what I mean? And it's like, oh, but we went there, but now you're not going back there. So that's where we were Friday. We were safely in the beginning, what, 6895, 6900. How many times of the back and forth and the back and forth, because it was like a one and it literally was a 1 day, you know what I mean? And
Yeah.
so
Yeah.
and
Yeah.
then it did expire worthless when I could have got even, and I was like, oh, you.
So I think so. This is my thing with that. If you're looking at it and you feel like, based on what you see in the chart, that it's going to do what you want it to do, then don't leave a trade that you believe is going to be fine just because of that. But don't be holding on just for hope's sake. If you're holding on because of reasons, like if you say it's been here in the chart, it's now, so and so got with the moving averages, it has something to do with fair value gaps. If you've got some justification for staying in a trade, that's one thing. But to say I'm just staying here because I hope it comes back, that's not the same thing.
Oh yeah, we're
So
not.
you know what I'm saying?
No, yes, we are. We
Yeah.
are strictly looking at repeat patterns, what it
Yes.
did. I look at the high and the low, the coming and the going, the new. Yeah, we not just being
Yeah.
opposite.
Yeah, that's the thing. If you're using the chart to justify staying longer to see if it's going to do what it does, then yeah, by all means do that. But if you're just hanging on for hope's sake, then that's not why we stay. That's not what you should be doing. Mm-mm. Like, I hope it come back. I still got time. Those aren't good answers. We do still have time, but does a chart showing does anything in this chart say it's going to come back? And if it doesn't, then you need to be saying, well, let me cut my losses right here and go on. Okay. I'll be on in the morning, 8:30. First thing in the morning, seeing what we can find, seeing what we can do, seeing how we can get this money. Okay.
Sounds good. Thanks much, Coach.
All righty. I will see you all in the morning. All right. Hasta mañana.
Hasta mañana.
Bye-bye.